So we're here today with Tripper, and Tripper is a loan officer with Prosperity Mortgage. All kinds of different programs, first-time home buyers, USDA. We're going to talk about a couple of different ones. But, one thing we hear the most is the first-time home buyer program, which a lot of people associate with FHA. So tell us just a little bit about a FHA loan.
Sure. The FHA loan is a program that a lot of first-time home buyers use, although it's not a requirement. The only requirement is that you cannot have another FHA loan while you have one currently. A couple big advantages which make it attractive to first-time home buyers is, unlike a conventional loan, which requires at least 5% down in most instances, it only requires 3.5% down. So it's a little bit less there. Another requirement is that the mortgage insurance factor is fixed so that those people who are either have limited credit or a little bit lower credit score because they're working on it can save money that way because their factor isn't going to be higher. Of the 3.5% though, it can also be given as a gift. So from a relative who wants to help you buy your first home or your second or third home, you don't have to have the money saved already.
Okay, so simple math, $100,000 house, you go to purchase the property, you use an FHA loan, that'd be $3,500 you'd have to have for a down payment, is that correct?
Correct. Yep, $3,500. Again, you can get it as a gift from a relative. A lot of times you can take it out of your 401k. If you've been at the job for a couple of years, you may have that money saved, so you can do it that way as well.
So if someone's looking to get an FHA loan, what kind of credit requirements do they have?
So an FHA loan is a great loan for those people who have credit that's considered mediocre. In some instances, you can go down to as low as 580. You really need a 600 score or better because that's when you can use the minimum of 3.5% down. Optimally, though, your score is going to be higher than 640 when the rates get a little bit lower.
Okay. And so with any loan, same as FHA, you also have closing costs. So you have a down payment, but you also have closing costs. Could you elaborate a little bit on that?
Yeah, it's a great question because there are costs with any transaction. The nice thing, again, about FHA and the other government subsidized loans is that unlike a conventional loan, which is capped at 3% of the sales price for closing cost assistance, an FHA loan you can get up to 6% of the closing costs from the seller. So for instance, in the example of $100,000, the 6% is $6,000. Which is going to cover almost all of the closing costs, if not all of them.
Okay, so using that same example, I'm a home buyer. I find a house that's $100,000. I'd have, say, $6,000 I would need for closing costs and $3,500 for down payment. But as part of negotiating, I could ask the seller to pay the $6,000 so that I would only have to come up with the $3,500. Is that correct?
That is correct. So typically speaking, from a seller's perspective, they're going to look at the net number. So $100,000 in sales price, if they're giving you $6,000, they're netting $94,000. So it's the same to them as if you offered $94,000. So a lot of what buyers are doing nowadays with the rates so low is that they're going a little bit higher, which makes your offer look better. And they're taking the money, essentially financing their closing costs. And mathematically, using the rule of thumb, which is about $5 for every additional $1,000 that you borrow, you have a choice of either taking $6,000 out of money that you have saved or paying an additional $30 a month. And so a lot of buyers nowadays would rather have the $6,000 in the bank or get it from the seller and pay an additional $30 than come out of the bank with it.
So in summary, FHA loan, 580 to 600 credit score, 3.5% down, and ultimately you can negotiate getting your closing costs paid.
Correct. Yeah, preferably 600 or above credit score. In some instances, we can go below. 3.5% down, of which you don't necessarily have to have your own funds. If you get a gift from a relative, the closing costs can be covered by the seller, and it is a great loan for people with limited credit history or that are repairing their credit to still be able to buy a house nowadays.
Perfect. Well, hey, thank you for explaining to us what an FHA loan is.
Thank you.